Assuming that the demand for Bitcoin stays the same and you cut the new supply in half, well, that should theoretically push the price up. And that's exactly what's happened. And I'm going to give you a very simple technical explanation of this so everybody can kind of understand this, why Bitcoin and not all the other cryptocurrencies. One thing about Bitcoin is, so every 4 years, the new supply of Bitcoin gets cut in half. Now, for your audience, while the world of economics seems very complicated, and it can be, prices just are really the equilibrium of supply and demand. So we just look at the supply and we look at the demand, and the imbalance tells us where that price should go. And so assuming that the demand for Bitcoin stays the same and you cut the new supply in half, well, that should theoretically push the price up. And that's exactly what's happened. Yeah. So that increased the demand side. So we increased the demand side on a much larger scale. And now we're reducing the supply at the same time, which, of course, back to economics 101, should be pushing the price up. But just to kind of set everybody up so what they know what this halving is that, with the Federal Reserve or any central bank for that matter, we have no idea what the supply of fiat currency will be at any given time, right? They just change it whenever they want. But what Bitcoin did is Bitcoin came out with a predictable supply issuance. So we know that there will never be more than 21 million, and that will be in 2140 or 116 years from now. But through that process, every 4 years, the supply of new Bitcoin coming out gets cut in half. So we were just seeing about a week ago about 6.25 Bitcoin per block every 10 minutes, or let's just call it 900 per day. 900 per day were being released. That was the new inflation amount. And that just got reduced to 450 a day. And so this is the fourth time that's happened. And officially now, Robert, you might like this, officially now, Bitcoin is the hardest money in the world. Gold has about an inflation rate of about 1.5%. On a stock to flow, that's the existing supply of gold, and then the new flow. So an inflation rate of about 1.5%. Bitcoin is now verifiably more scarce than gold. So that's pretty cool. There's a couple of reasons why. I can tell you it's actually pretty simple. First of all, why should you jump in? Well, historically, supply and demand on the supply shock. So in the 2012 halving, the price of Bitcoin from the day the halving happened to the high point went up 9,300%. The second halving in 2016, it went from the day of halving to the high point was 2,900% increase in price. 2020, from the low point to from the halving to the high point was 700% increase. And so historically, getting in around the halving has been very good for capital appreciation. Now, as to why it shouldn't be Rich Dad Coin or Dogecoin or Ethereum Coin or whatever, one of my favorite analysts, Lynn Alden, says that to conflate Bitcoin and crypto shows that you don't really understand either. So I can just give you a very simple explanation for this. To your point, you can create Rich Dad Coin. I could also create a copy of Facebook called Mark's Book, or I can create a copy of Twitter called Mark's Twitter. But doesn't mean anybody will come use it. So that's number one. Network effects are real. And specifically around monetary networks, the network effects are even more real, because what you store your wealth in really matters, right? When the whole world moved to the gold standard and China wanted to stay on the silver standard, they lost their position in the world because of that. So while choosing the right or wrong social network might not be as big of a deal, the monetary network is. So that's number one. Yep, that's exactly right, Robert. So the bigger the network gets, the more powerful it gets, and the network effects are very, very, very powerful. And so it's very, very hard to create a copy of Facebook or Instagram and then try to outbeat them. It's sort of what we would call evolutionary biology. So like we've seen this happen all over the world, Robert. Like from where you're from, Hawaii, a new species get introduced that isn't native to that environment, and they can quickly grow to fill up that new environment, a rabbit or a snake or something like that. And then once that new species has been introduced and filled up that demand in that environment, a new species can't come take it. It's already been taken. And that's sort of like what Bitcoin has done. And I'm going to give you a very simple technical explanation of this so everybody can kind of understand this, why Bitcoin and not all the other cryptocurrencies. The real revolution here is to go from a centralized system like the Fed or central bank or Facebook to a decentralized system. So instead of one database that the Fed controls or the bank controls, we have millions of databases. In order to stay really decentralized, where we have millions of databases, everybody has to be able to run one. So the Bitcoin database is about 400 gigabytes. It can fit on a thumb drive. A kid in Africa with a 7-year-old laptop can download the Bitcoin database and start running it. Anyone in the world can run a Bitcoin database, which keeps it decentralized. Bitcoin won that race. And so every other cryptocurrency, Solana, Ethereum, they're competing for something else. They're not competing for a decentralized currency. They can't be more decentralized. So they're competing for something else. The reason why is because their databases are so big. So like Ethereum, for example, I can't run an Ethereum database. I can only run a portion of it, and only if I have a professional server in a professional co-location facility like an Amazon cloud service. And so nobody or very few people can run that database, which makes it very centralized. So all of those aren't competing against Bitcoin. They're competing against something else, and we don't know what that is right now. But we know Bitcoin is competing not as a new technology, Robert. It's competing for value itself.